Zysol and get your free sample at Zysol.com.
Welcome back. Now this, Saudi Aramco's long-awaited and highly anticipated IPO reportedly delayed until next year. Joining us right now is the Schork Report publisher, Stephen Schork. Stephen, good to see you. Thanks so much for joining us this morning. This deal was really the centerpiece of an ambitious economic overhaul of Saudi Arabia. What's your take on the fact that this deal keeps getting delayed? Now it's going to be delayed, we understand by these reports, until next year.
Saudi Arabia, Maria, is playing an extreme dangerous game of chicken at this point. They seem to be holding out for a $2 trillion valuation, which at this point they may never see. And when I say they're playing a game of chicken, the longer they wait, now we're pushing it back maybe a year from now, you're just given one more year for the U.S. crude oil export market to mature. You're given one more year for North American crude oil, therefore, to hit the market. You're given one more year for electric vehicles to further erode the demand elasticity for crude oil.
Yeah.
So the longer they wait, the odds they get their valuation continue to fall, and the odds that they actually go with this IPO begin to fall.
Yeah, see, one of the issues here is the fact that a couple of years ago, Congress changed the law allowing the victims, people who died, and their families to sue the Saudi government over 9/11. So, you know, going public at the New York Stock Exchange is probably going to be a big problem for the Saudis, Mitch, because they're going to be faced with enormous amount of lawsuits.
Right.
And that's one of the issues that keeps pushing this deal back.
Yes. But yet they chose to go public in the United States. They could have gone public in London or another jurisdiction.
Right.
So that was their choice.
Exactly. So we'll see. Meanwhile, there's OPEC, right? Stephen taking sides on oil prices. The Journal this morning is reporting the split driven by opposing views on whether prices will send U.S. shale companies into a production overdrive, and that could trigger a sharp decline. What's your take?
Well, absolutely, Maria. U.S. shale companies are already in overdrive at this point. OPEC a few years ago did the U.S. industry a tremendous favor by forcing the decline in prices, because all this did was make U.S. shale more efficient, more productive, and more productive at lower prices. So when we look at things like hedging, right now, we've seen a significant amount, record amount of hedging, from producers. Producers only hedge to bring more product to the market. When we look at, Maria, the rig counts, production correlated to oil prices with a 4-month lag, given that we've had such a significant rise and we're staying above $60 a barrel, we're just bringing more and more rigs to the point where over the last year, the rig count, oil rig specific, has more than doubled. It's actually up 230%. So production is rising and is going to continue to rise and should help to dampen any further increase in price for oil, which again, going back to Aramco, the bigger the risk they take with prolonging this IPO.
Mike Baker, Saudi Arabia is pushing for $70 a barrel. Iran is pushing for $60 a barrel.
Yeah, I was curious to get Stephen's take, Stephen, on this. Look, given that Saudi and Iran are on opposite sides of the coin here for just about everything in the region, what are the chances that they can find some sort of common pricing ground?
At this point, Mike, I'm extremely skeptical. When I used to consult with OPEC about 10 years ago with regard to the split between the Sunni Shia side within OPEC, I was always told they always come down to business. And the example, and it was fantastic, during the 1980s when the Sunnis and Shias were slaughtering one another back then for 8 years, they still got down and they still took care of business. But right now, Mike, we're looking at the largest chasm outside of that, and this is because of Iran's nuclear ambitions, because of Iran's hegemonic ambitions in the region, is causing a tremendous rift between the two adversaries, and I don't see a lot of possibility for any sort of meeting of a common ground between these two.
Hey, Stephen, Mitch Rochelle, quick question for you. On the supply side, we have rig count, we have shale production. One of the things I wanted to focus on as it relates to price is the demand side, which is what's going on with the economy heating up and job creation. Right. Is that going to be the sort of impetus to keep pushing prices higher?
Yeah, Mitch, I'm still very skeptical on that, simply because, yes, demand will rise, but it's not going to rise commensurate to what we've seen in the past. And this is because of the change in elasticities. You need two factors to impact consumer behavior. We've always had the first factor, that is the price shock, going back for 2 generations now. But up until recently, we've never had the second, and that is the substitute. Over the weekend, Porsche in Stuttgart came out with their new EV that is going to rival the Tesla. So to this point, we're only looking at more EVs hitting the market, and certainly that's going to dampen any sort of significant rise in demand commensurate enough to push oil prices much further in the near future.
All right, we'll leave it there. Stephen, so it's good to get your take. Thanks so much.
Thanks, Maria.
Stephen Schork, good to see you. Still ahead, meeting face-to-face, President Trump agreeing to an historic sit-down with North Korean leader Kim Jong-un.